TSLA earnings preview. Sales are down. What's left to rely on? Reminder: Tesla will report its Q2 2025 earnings after the U.S. market closes on July 23. Since June 22, when Tesla began robotaxi test runs in Austin, Texas, the stock hasn't taken off like a rocket. Instead, it's been quietly fading into the background. And now, we've got hard numbers. Q2 vehicle sales dropped 13.5%, a clearly visible slowdown. So what's the point of this earnings call? Actually, there's still a lot to watch. Investors are focused on automotive gross margin, energy storage, FSD subscription growth, and of course, Tesla's signature massive future promises. What's the market watching? Revenue estimate, around $22.36 billion, down 12.32% YoY versus $25.5 billion last year. EPS estimate, around 30 cents, down 23.38% YoY. But don't be too discouraged. While Tesla's car sales have slowed, its energy storage business has been quietly gaining momentum. This may be the unsung hero of Q2, for key areas to steer by. 1. Vehicle deliveries and production. Q2 deliveries, 384,000 vehicles gives down 13.5% YoY, but up 14% from Q1. Q2 production, 410,000 vehicles gives flat YoY, but higher than Q1. Investor focus: can Q3 continue the climb or stabilize? Can 2025 full year beat the 1.79 million vehicle record? Meanwhile, GM is aggressively expanding with Cadillac, Chevy, GMC, grabbing 12.9% EV market share, up 6 percentage points. And guess who lost that 6%? Yup, Tesla. To automotive gross margin, Q2 2024, 18.3%. Q1 2025, 16.3%. Expected Q2 2025, 16.4% slight rebound. Even though the new Model Y might lift prices a bit, supply chain issues could keep squeezing margins. 3. Energy storage and services revenue. This might be Q2's superhero segment. In Q1, energy storage made up 14.12% of total revenue. Gross margin was higher than automotive. Highlight: Tesla's Shanghai Megapack factory is now online, producing large batteries for commercial, industrial use. It uses CATL batteries, which cost half as much as US counterparts, made in China. Profits worldwide. These megapacks aren't just for China, they're being exported to Australia, Southeast Asia, etc. Meanwhile, robotaxi may not be bringing in real revenue yet, but it could drive up FSD full self-driving subscriptions. If people see a car driving itself, they might feel like opening their wallets. For guidance and strategic moves, after Q1, Musk pulled back the 2025 growth target, probably expecting some turbulence. Now investors are waiting for answers. Will there be new guidance? How's the affordable model coming along? What's the next robotaxi step? Any new updates on FSD, external risk? Starting October 1st, the US will cancel the $7,500 EV tax credit, including the leasing loophole. That means one less incentive to buy EVs, a potential headache for Tesla. What's the options market saying? Most activity is around $325 call options expiring next Friday. Put call ratio is balanced. Market sentiment is neutral. Implied volatility is falling. People don't expect major moves ahead of earnings. DUT Tesla's stock has moved an average of 10% after the past 12 earnings. We don't recommend gambling on earnings unless your heart can take the ride. Valuation, opportunity, and risk. Valuation, P/E over 150x, mainly riding on robotaxi and Optimus robot hopes. Opportunity, rising product prices, booming energy storage. Risk, no Optimus deliveries yet. Fierce competition from GM. 4. BYD, 1-sentence summary. Car sales are weak, batteries to the rescue. Margins under pressure, future hike to the rescue. Musk and Tesla now look like a magician on a skateboard, juggling robots, self-driving, and battery factories. Whichever one turns into real cash flow first becomes the MVP. Palantir to $1,000, some say $500 is just the floor. Palantir is on fire. up 434% in the past year. But one die-hard bull, Tom Nash, isn't just holding, he's doubling down. He claims the stock could hit $1,000 in the next 5 years. From today's $150, that's a plus 562% gain. Think that's wild? He backs it up with numbers, Nash's case. On his YouTube channel, Nash said bluntly, "This company is basically already perfect, not just hype." He sees a financial transformation. Revenue up 90% over 3 years. Profit up 200%, free cash flow up 500%. He also notes, Palantir used to be seen as a meme stock, but now it's a clear institutional darling. Institutional ownership rose from 30% to nearly 60%. It's no longer the queen of retail, it's the king of Wall Street, Nash joked. Wall Street doesn't get it, Nash says. Wall Street still doesn't understand Palantir. They just see the stock going up, that's it. He now sees $500 as a bear case target, his 5-year price targets. Bear case, $500 plus 231%. Base case, $754 plus 400%. Bull case, $1,000 plus 562%. $500 is the worst case scenario, he claims. What's Palantir's moat? Nash highlights scalability as key. Palantir provides the full software stack needed to run large language models for big enterprises. In short, anyone serious about AI can't avoid Palantir. Valuation is controversial, sure, but Nash tells long-term investors, don't get spooked, focus on fundamentals. He closes with a Peter Lynch quote. As long as you're a long-term investor, it's never too late to buy a great company. He's not alone on the bull train. Other analysts and influencers have been ultra-bullish too. Denives Wedbush calls Palantir the Messi of AI, sets a $400 target. Implies $1 trillion market cap. Martin Shkreli Pharma Bro believes Palantir could hit a $10 trillion market cap. Why? Because it targets every Fortune 500 company. But not everyone's cheering. Out of 25 analysts tracked by Benzinga, many still rate sell, with an average price target of $76.72. Almost 50% below the current price. Still, according to Benzinga's edge scoring system, Palantir ranks strong in growth, momentum, long-term trends. In short, both technicals and story look strong. One-sentence summary. Palantir is no longer just a story stock, it's a data weapons dealer. It has AI, government contracts, high growth, and strong free cash flow. Bulls say, it's just getting started. $1,000 target is real. Dares say, it's in a bubble. Price is too far from Earth. If you believe AI is the next operating system, Palantir might be your ticket to the future. Stocks like Nvidia, TSMC, and Palantir, every dip has been a buy opportunity. Since April 7th, Palantir has more than doubled, Nvidia has doubled, and TSMC is up 80%. One top investor we follow, J. Law, bought back into Palantir in April and picked up Nvidia in early July. We believe Palantir is likely to report its 5th consecutive quarter of accelerating revenue on August 4th. We remain long and hold the stock. Retirement revolution, Trump says. Let your 401k party. Think your 401k is only good for buying boring index funds, bond funds, or basic stock funds. Time to upgrade that mindset. President Trump is cooking up a bold move to liberate your retirement savings. Word on the street is that Trump is preparing to sign an executive order that could shake up Wall Street. Americans may soon be allowed to invest their 401k retirement accounts in crypto, gold, private equity, even and infrastructure funds. In short, no more being limited to the traditional trio stocks, bonds, and mutual funds. In the future, your 401k could be used to buy Bitcoin, hoard gold, or invest in Blackstone. Grandpa's wallet may finally join the financial future of Gen Z. We're talking about a $9 trillion treasure chest. The total size of US 401k retirement accounts is now close to $9 trillion. The lifeline for millions of middle-class Americans' future. Right now, 401ks are heavily regulated and mostly limited to public market investments, S&P 500 index funds, bond funds, etc. But Trump thinks that's too conservative. Why should your retirement money be left out of the action? So what's he planning? Letting your pension take a walk on the wild side into alternative assets. What kind of alternatives are we talking about? Cryptocurrencies, Bitcoin, Ethereum, you name it. Precious metals like gold and silver. Private equity, Blackstone, Apollo-style rich people deals. Private lending, infrastructure projects, and other areas regular folks rarely get access to. How would this work? Insiders say the executive order will push federal regulators to clear the roadblocks, reviewing and revising policies that keep alternative assets out of 401ks. The White House's official response: yeah, the president is considering it, but unless he says it himself, don't jump to conclusions. Why is Trump doing this? Two big reasons. One, support crypto. Ever since reclaiming the political spotlight, Trump's gone full throttle on crypto deregulation. He's been reversing Biden-era crypto restrictions. Congress just passed 3 crypto-friendly bills this week, all backed by Trump. Trump even said, "I won the 2024 election thanks to the crypto community." Oh, and don't forget, Trump's family is already going full crypto. Their public company plans to buy over $2 billion in crypto assets. They're also planning to launch a stablecoin plus their own digital token. Gives basically, the Trump crypto universe is coming, point to with the private equity titans. Not just crypto folks, the world's biggest private equity giants are loving this too. They've long dreamed of tapping into the 401k goldmine but couldn't get through. This order could throw the vault wide open. They've already started making moves. Blackstone is partnering with Vanguard. Apollo is teaming up with Empower, a big 401k platform. BlackRock is working with Great Gray Trust. They're not just targeting the rich, they're coming for your parents' retirement accounts. Not all sunshine, there are risks, too. Sure, crypto, private equity, and gold sound cool, but the risks are very real. Private equity investments are illiquid. You want to cash out, get in line. High fees, murky valuations. Don't be shocked if your account randomly drops 3%. Add leverage into the mix and retirement could turn into early retirement from your portfolio. The media points out that this order may also push the Labor Department to give 401k plan managers a liability shield safe harbor. If they reasonably offer these alternative assets, they can't be sued just because they're volatile or hard to price. One sentence summary: Trump's move is about giving America's retirement accounts a shot at more than just safety. It's about adding a little dream. Want to buy Bitcoin for retirement? Soon? You just might. Want to invest in Blackstone's high-yield deals? Also possible. Want to roll the dice with your pension and turn that bike into a motorcycle? The door might actually be opening. Whether this policy will go through, and whether it's good or bad in the long run, depends on regulation, risk control, and investor education. But in the short term, it's clearly huge news for crypto, private equity, and gold lovers. We said it's crypto week, and the crypto stocks took off. Bitcoin, coin, and TODL hit new highs this week. CRCL jumped 25%. Earlier this week we talked about the drone boom, and our pick PDYN just surged 31% today. Opportunities are everywhere. Stay tuned. Bonus pick, a short-term explosive stock. Let's talk about APLD, a name we've mentioned several times. Since mid-April, the stock tripled by early June. And just this week, we saw 2 new buy signals. Currently trading under $11, and we believe it's got short-term potential to hit $15. Risk warning: this stock is highly volatile, suited for short-term traders, not long-term holders. High risk, high reward. If you like our content, remember to subscribe, like, and hit the bell icon so you won't miss any exciting updates.